that whenever I've said that the end game, we will see hyperinflation of the things you need and hyperdeflation of the things you have. I've been told, 1,000 times, you're an idiot, it can't happen, you can't have inflation and deflation at the same time. But we have that already.
Step into the world of economic foresight with Bill Holter. In a landscape where an economic breakdown could trigger the introduction of a digital dollar, Holter emphasizes the need for proactive preparation to protect your personal liberty and privacy. Bill Holter sheds light on the vulnerability of retail and institutional gold and silver reserves, highlighting the potential ripple effect of a single large institution's metals purchase. Learn why the time to prepare and secure precious metals is now, while the opportunity still exists.
Right. Well, first off, I think something already has broken. It's pretty clear that the numbers that they've been giving us have been bogus numbers. I mean, look at, just for example, today, the consumer, I think I read it was a 9 sigma event miss. The consumer has collapsed. Real estate is collapsing. We're already in a recession. There's no doubt in my mind that we're already in a recession. This thing is going to turn into a depression. Interest rates have spiked dramatically. And as I've talked about for many years, the world runs on credit. And I mean, rates on the 10-year have gone from, over 2 years' time, gone from 0.6 of 1% all the way up to 4.6. So, I mean, that is a 4 percentage points is a giant move, but off of a base of 0.6, it's a tsunami. And that's, I mean, you can see that clearly. I think the pending home sales is now at all-time lows since they've been tracking it. And that was just announced today or yesterday or the day before. So it's pretty clear that the economy has already or is already rolling over drastically. You mentioned China. China is a huge debt monster also. Their real estate market has been weak and, if you want to call it, imploding now for a year. I mean, China is over 300% debt to GDP. We have reached, on a global basis, debt saturation. And what debt saturation means is basically there is not the ability to take on more credit, nor is there the appetite to take on more credit. And because this whole system is set up as a Ponzi scheme, the only way to get new capital into the system to pay off old investors, as in a Ponzi scheme, is to create more debt. They cannot, I mean, we're at debt saturation. There's no way that debt can grow exponentially from here. If you look at, in the US, look at M2 money supply. That's down 5% year over year. That's never, ever happened, except I think during, what was it, 1930 or 31, it was during the Depression. This, to me, is so reminiscent of what you saw all the way back to 1987. It's very reminiscent of what you saw going into the dot-com bubble. It's very reminiscent of what you saw going into the great financial crisis, 2008, 2009. You're seeing interest rates spike, only this time the spike is higher than the previous high. That's the first time that's happened since 1982, where interest rates actually took out the highs of the previous high. So it's already a huge event. Things are already breaking behind the scenes. And you mentioned that the Fed just paused. To me, it looks like they're doing this on purpose. I mean, I wrote this back in 2007, that the policies that they were putting in place were too stupid to be a mistake. That whenever I've said that the end game, we will see hyperinflation of the things you need and hyperdeflation of the things you have. I've been told, 1,000 times, you're an idiot, it can't happen, you can't have inflation and deflation at the same time. But we have that already. I mean, just go to the grocery store, look at healthcare costs, look at oil. The things that you need to survive are inflating. There's no question about it. And the things that you have real estate, uh, stocks. And when I say stocks, don't look at the averages because they're able to hold, yeah, or they've been able to hold the averages up by manipulating a dozen or 15, 20 different stocks to keep the averages up. But if you look at the average stock, I mean, they're hammered. They're down 30, 40, 50% inside, in the broad picture. So, I mean, we're seeing deflation of the things we have. And just look at the credit markets. Look at bonds. Bonds, US Treasuries are the foundation to the entire system. Yet, with interest rates going up, you've got huge losses. I think I just read an article, the Fed has lost over 100 billion. Bank of America, their book is down over 100 billion. And it's interesting, they did merge the Fed and the Treasury a year ago or 2 years ago. So now the Fed can rely on the balance sheet of the Treasury, which is even worse. Well, you put a time frame on it, so not sure I can answer correctly in a 1 year time frame. I certainly think we're going to have the breakdown within the year. How long is it going to be broken down? Is it going to be 2 months, 2 years, a generation? I don't know. But at some point in time, we are going to go through, I believe, a Mad Max scenario where, because credit has broken down and the payment systems will break down. Right. The time to buy insurance is when you can buy it. I mean, if you lived in New Orleans and Hurricane Katrina all of a sudden popped up on the map, you couldn't get insurance any longer. So your ability to protect yourself was gone. So you want to step up. I mean, if you've got funds that you want to protect, just protect it. Don't try to time it. I mean, timing it now is stupid because there's only a few seconds left on the clock. As far as debanking goes, I have kind of been surprised that hadn't been done already, the way they tried to do with gun dealers. What's going to happen at that point? If dealers get debanked, then what does gold and silver in your hand become worth? It becomes worth more because the population can't get any, and the owners of metal will become whatever supply there's going to be. We're talking about retail supply, and that's retail is. I mean, you'd have to have a full-on onslaught for retail to clean out all the gold. You only need 1 or 2 big orders institutionally to clean up every ounce on the planet, because you're talking about so many dollars, so many yen, so many yuan, euros, etc. On an institutional basis. I mean, you get an institution that wants to move 100 billion, forget 100 billion, 10 or 20 billion dollars would clean up all the gold and all the silver available from an institutional standpoint. And we're not talking billions anymore. In today's world, we're talking trillions. And in the derivatives world, you're talking quadrillions. So what I'm getting at is the institutional supply is so small that all it's going to take is one large institution to panic and say, I'm out of here. I'm buying gold. I'm buying silver. I'm digging a hole and I'm going to pull a rock over it and I'll look out when the smoke clears. You get 1 or 2 institutions that do that and it's completely over. Yeah. And I mean, the retail market, you could completely annihilate and cripple the entire retail sector across the country for $500 million. $500 million would clean up. Let me be generous. $1 billion. $1 billion would clean up every single ounce of gold, every single ounce of silver. There'd be nothing available, and premiums would be 100% over spot, and spot would be meaningless. And that's where we're headed.
As we conclude this eye-opening discussion with Bill Holter, we hope you've gained valuable insights into the potential future of our economic landscape. Remember, in an era where a digital dollar might be deployed as a solution, your preparation today can safeguard your freedom and privacy tomorrow. Bill Holter's wisdom reminds us of the fragility of gold and silver reserves, highlighting the domino effect a single institution's actions can trigger. Stay informed, stay prepared, and stay vigilant. Damn, don't forget to like, share, subscribe. Thank you.